Hey folks, how are you doing? It's nice to have you back on my YouTube channel. Today, I'm gonna show you how you can turn your $130 into $970, so do watch this video up to the end. In the description below this video, you will find a link to my Telegram channel, where you can ask me any questions. Besides, you will find a link to my private Telegram channel, where I share my daily trading signals. Send me a direct message on my private Telegram channel and get my personal link for PocketOption registration, which will give you a 50% bonus on your deposit. And now, let's go to PocketOption and get down to trading. We work with the Euro-British Pound currency pair. After thinking it over, I open a down trade for 1 minute. The initial bid is $100. Please note that today each candle is 15 seconds. When I made the decision, I took into account the price movement as the growth of price slowed down and a new candle opened with a gap down. In addition, I took into account the data of the Williams percent range indicator, whose line left the overbought zone, breaking through the -20 level at the same time, which is a clear signal of a possible decline in price. On the chart, we clearly see that the price was steadily declining for 15 seconds, but then there was a short-term rebound. Then the decline in price continued. The new candle, having opened, also began to decline. The Williams percent range and the stochastic oscillator indicators confirm a possible price decline. After 15 seconds are completed, and already a new candle continues to decline. East, and we earn $70. Not bad for a start. The trade closed very smoothly with a nice profit, and we can continue further to start looking for a new entry point into the next trade. But before that, we will change the bet. We have $200 on the balance, and we raise the bet amount to $200. We go all in. The price, making some fluctuations, nevertheless tries to grow, but if you pay attention to the indicators, the stochastic indicator gives a signal about a possible price increase, but the Williams percent range indicator, on the contrary, signals a possible decline in price. The price starts an impulse decline, and on the rebound I open a down trade for 1 minute. Our balance is back to zero, all the money is in the trade, and let's watch the trade. After opening the trade, the price rose slightly, but then went down very sharply, and then, having reached the lower limit of the downtrend indicator, it made a rebound and began to fix in the area of the average line. The new candle, after opening, also began an active decline. In this situation, the Williams percent range and the stochastic indicators give the same signals about a possible price decline. The next 15 seconds have ended and the price has reversed, actively growing to the average line of the downtrend indicator, where the fixation occurs, and then the price begins to fluctuate, gradually decreasing. Fluctuations increase their amplitude, but the price is at a comfortable level for us. The time of the trade is rapidly expiring. Yeah! Now our profit is $140, and we have on our balance, as we see, it is already $340. And this trade went smoothly as we expected. Let's continue. But before that, I want to raise the bet amount again, and the next trade will be for $340, and it's all in again. I think you have noticed that with this approach, any mistake will lead to the loss of the money on our balance. Therefore, any haste when choosing a trade should be excluded, and carefully monitor the signals of the indicators. But unfortunately, even such measures cannot completely exclude a negative outcome of the trade. And in the meantime, I opened a new down trade for 1 minute. This decision was made based on the movement of price since the area of the upper limit of the downtrend indicator. There is a strong resistance from sellers. And also taking into account the data of the Williams percent range indicator, the lines of which, in an active price increase, on the contrary, is trying to start to turn around, which is a signal of a possible decline in price. Let's pay attention to the bidding. The price is actively declining, but when it reaches the average line, there is a rebound. And now it is in the area of the opening of the trade, from what there is a reason for worries. After all, despite my confidence in the trade, I remind you the result can be absolutely anything and unexpected. Now the price continues to decline and the closing candle opens but it does not show an activity yet, and we earned $238, increasing the balance to $578. Fine, we can continue, but before that, we will increase the trade amount again, increasing it to $570. We will leave $8 on the deposit. Now you can start searching for an entry point for the next trade. The price making fluctuations remains almost at the same level this is in the flat. With this behavior, it is very difficult to predict the price behavior. After the next fluctuation, there is a strong upward movement, but the new candle immediately decreases. I open a down trade for 1 minute. The situation is similar to the last trade. The price near the upper limit of the downtrend indicator are experiencing a strong resistance from sellers who do not allow the price to rise. I also took into account the data of the Williams percent range indicator, whose line, being in the overbought zone, clearly seeks to get out of it, which is a signal of a possible decline in price. There was no clear signal from the stochastic indicator. After opening the trade, the price was able to grow further by pushing the upper limit of the downtrend indicator, and then it decreased but slightly, and making fluctuations, it is in the area of entering the trade. After a slight fixation, the price begins to decline, aiming for the average line of the downtrend indicator. The pulse fades and a new candle opens. We're waiting east, and we earned $399 on this trade. The first half of the trade was exciting, but nevertheless it ended in accordance with our forecast. And let's summarize today's trading session. With the initial balance of $130, we were smart enough to stretch it to $977 in less than 8 minutes. That's a great result, but then again, I warned you against the risks to your balance if you apply this approach. It is essential that you carefully assess the current market situation before entering a trade. I recommend you to use indicators, for this helps reduce the risk and make a profit in the long term. I would like to encourage you guys to keep trading binary options because, as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video you will find a link to my Telegram channel where you can ask me any questions you have. You will also find a link to my private Telegram channel there where I share my daily trading signals and more. If you direct message me on my private Telegram channel, you will receive a personal link to the PocketOption registration, which will give you a whopping 50% bonus to your deposit for free. Now, dear friends, this is a pretty nice offer, and I do hope you found this video helpful. Thank you for being with me all this time. I hope you enjoyed this video, and if you did, please like it, subscribe to my channel, and click the notification bell so you don't miss a thing. That's about all for today. Good luck in the market, take care folks, and see you soon in the next video.